Hello and welcome to the week beginning the 7th of August 2017. Last week, the 4 days that we did have in August, they were quite a change in terms of what happened in central bank. There's a couple of them this week. One to really watch is actually our friends across the way with New Zealand. We see that tomorrow on what will probably be a fairly normalised event. There isn't going to be any major change there, but at the moment, if you ever do want to look at New Zealand, you always look at the dairy prices, and dairy prices have actually slightly increased over the last 6 months. It is putting a little bit of pressure in New Zealand inflation, but in the main it's not. So it's probably just an event to keep an eye on. It therefore means that look at the Aussie Kiwi. Aussie Kiwi's been quite an interesting inflection point. It sort of continues to hold at about 109, and if you do see any slightly more hawkish statements, maybe you'll start to see that Kiwi push back down towards parity, which it's tried a couple of times, hasn't got through, but it's certainly tried, and maybe one to watch on your radar this week. In the main, however, there are a few other bits and pieces that you probably need to look at from an Australian-centric point of view. There's a lot of Chinese data that comes out this week. Trade balance is one, there's CPI data is two, and then there is also fairly rumours. It's fairly well guarded, but there is rumours that there may be some talk out of Beijing, and I think that's probably the more important thing leading into what will be a very, very interesting meeting for the People's Congress at the end of October or November. The date is still very, very well guarded, unsure of when it is. Going on history, it's back end of October or the first week of November. And the reason I highlight it is that at the moment you've seen, particularly out of China, a lot of data that shows that they are really ramping up their infrastructure spending. Have a look at steel prices, have a look at the iron ore price, have also a look at the copper price, and that really shows you that China at the moment, for the rest of 2017, wants to hold on to that leading into that meeting, because it's very, very important to the Communist Party, and it's very important to making sure that they continue to maintain the status quo. 2018 could be a completely different story, and that's certainly something I'll talk about over the next couple of months, but that's why this week China is your theme, and that therefore also filters into what I like talking about, which is the Aussie. It's had, a perfect storm. At the moment, you've got a backing away US Fed in terms of raising rates. Last week, we saw the RBA basically telling you that it can't control the exchange rate and wants it lower, but really can't do anything about it. And then in saying that, the commodity prices I just alluded to are actually the positive on the Aussie side, pushing it higher. So it's your gauge this week to work out what might actually happen in terms of filtering into equity markets, filtering into the carry trade. Have a look also at the moment at the Australian 10-year government bond, shifting up higher, whereas the US government bond is shifting lower. There's a carry trade pull in there as well. That's actually a positive for equities. It means international investment will filter in there as well, not just the bond market, but also into ours. So real interesting week, but I think August so far has really highlighted to you that it is a difference. There has been a change around particularly inflation. I think you're going to see more data this week just on analyst expectations and private banks really putting out there their ideas that inflation just isn't materializing, and therefore probably most central banks are out of the way. So flat week in terms of actual specific data, but they're the things I'm watching and certainly something that should be on your radar for the rest of this week, and talk to you on Friday.
The essence of robo-advice is using technology and digital services to help members or clients reach their financial goals and helping you improve your portfolio through diversification. That's investment advice. That's automated investment advice. By using technology and automated services is being able to deliver those services cheaply and affordably. Robo-advice or automated investment services are just the start.